So Clay is looking at me with a hook right now, and technically speaking, coffee break is supposed to start in 15 minutes. While I'm surely not going to promise we'll be done in 15 minutes, I will spare you all the trouble of having to listen to me for all that long, not necessarily for the coffee break, but to spare you all for the cocktail hour, which will be here in an hour. So let's just jump right into it. We have 4 panelists today to discuss finance. Each panelist has a little bit of a different specialty. So we're going to do some quick self-introductions, maybe a few minutes, if we can keep it to that, each, starting, I think, with Martin, who's very familiar to this conference. For years, he was wearing the Nordea hat as the banker on this panel. Now Martin is his own boss and can say whatever he would like. So Martin, tell us what you're doing these days at Green Harbour, is it? And so tell us what you're up to and
sure, and
say whatever you want.
Okay, I say kind of, because these days I only have one boss, and that's my wife. Before I had many bosses. So truly, Green Harbour Advisors, that's the name of my company. And it's not some form of greenwashing, because it is actually the address where I live. So that's a very common thing. But I thought it was very appropriate. I wanted to sort of capitalize on 35 years in finance and decided to offer up my services as an advisor on senior debt. And basically, any issuer or borrower or advisor or consultant, if they have any questions, they'll come to me. Or if they come to me, I'll be happy to answer. And I get some incoming, so that's been interesting. I've also done quite a bit of work on Chinese leasing lately, and we have a few pitches out, which is also a kind of an interesting subject right now. What is going on with that? And particularly after today's conference, it raises a lot of interesting thoughts. And then, as any retired banker, I look for opportunities on the board side. So. There it is. Very happy to be here. Thanks, Brian.
Well, welcome, and we'll look forward to your wisdom, years of experience. So I think, Yannick, we'll jump to you right now. We'll jump around a little bit. Let's just say you're maybe the new and improved Martin. You're the new traditional banker on the panel. And I know you guys have been very active in the New York market. Taking over the ABN book in and of itself would be enough to keep you guys busy. So what are you guys all up to?
Yeah, thanks, and thank you. But I don't think I'm the improved Martin. There's only one Martin. I've basically, my name is Yannick. I've been heading the team here in New York since August 2022. I actually spent the last 4 years before in Greece. And then right now, so we are traditional shipping banks, having been in shipping for the last 40 years and in New York since, I think, 2011. And really focusing on the traditional North American client, the usual suspect, the listed company, but some of them as well, privately owned in Connecticut. We have been active, but I was thinking, reflecting on the number of tanker company here in New York, and I remember being here in 2012. There was 3 major VLCC owner, and there's only one now. So. We look forward for a new client and also for new building orders, by the way. So because, as the traditional shipping banks as well, we're not really the alternative lender. So we like to finance modern asset. And that was, very much the case, the last 6-7 years. But, the last 2 years actually has been more and more difficult to finance new buildings, modern asset. And this is in the context of also, higher pressure on the regulatory front. We mentioned about CII, but also as banks, shipping banks, together with other banks, we have been signing the Poseidon Principle. And yes, we've seen the result for the year 2022, not so great. And because, I think mostly because of lack of new buildings coming from our clients. Which means that the fleet we finance is getting older. Yeah.
Thanks. Well, with any luck, we'll get to Poseidon Principles and interest rates and things like that before we get pulled off the stage. But moving on to Mark, I guess, if you can maybe just give us a state of the state maybe of the capital markets, your views on where things are, where they're going.
Sure. And good afternoon, everybody. we've been going through a really interesting market, and sort of one of the surprising elements of it of late is we've seen more strength than weakness with shipping companies and their prospects. And probably one of the outcomes of that is enhanced consolidation activity. Balance sheets are stronger, cash balances are higher, appetite for risk is greater. And so, our platform is based around advice, and so through the cycle, we spend a lot of time on M&A, restructuring, and capital markets and issuing securities. But given what's going on, by far, the M&A part of our business is the most active, given, the kind of activity I think everybody, sees all around us, whether it's Euronav, Frontline, or otherwise. And, over the last year, we worked with Taylor Maritime on the Grindrod acquisition. We sold a fleet for Sea Trade. We worked with a Hogue board on the consolidation of those two entities, and those are just a couple of examples. And I think the M&A cycle still has some juice left in it.
So that elusive M&A cycle that we've been talking about for years but haven't actually been seeing, so it's happening, finally. So Kevin, maybe taking a little cradle to grave. I know AMA has been very actively involved in many of the restructurings that have happened over the past several years. I guess similar kind of question, state of the restructurings, where are we, where are we going, are we done, or is everyone as rich as Mark thinks?
It feels like it for the time being, at least. Since I rejoined AMA 11 years ago, I'd say well over half of our business has been on the restructuring side. We try to position ourselves as a bridge between the financial world and the operating world. We know enough about the operating side to be dangerous. But when you get into these restructurings, there's multiple components to it. There's always the advisory side, but there's often M&A. There's also capital raise. So that lends itself well to times like today, where you get to a little bit of a better market across the board, really. So from our standpoint, we're finishing up a couple of restructurings on the offshore side, but we're spending a lot more of our time on strategic advisory and M&A, a little bit on the capital raise side too.
Great. Well, thank you all. So with this M&A and strong balance sheets and it's a little bit of an industry changer, I think, historically. At least, I've been doing this for 25 years. I think Nikos Petrakakos hit the nail on the head with what I've generally seen as a trend over that period, which is, your traditional Greek bilateral loan doesn't necessarily happen as often as it used to. It's more of projects is what I hear. This is a project, or this is a corporate credit, as opposed to just looking to the value of the steel infrastructure. Yeah, that whole trend seems to be happening. Are we there finally? Is it a game changer? Is shipping getting a new respect, perhaps? Mark, maybe if we can throw that to you, or?
Well, I think the trend has been apparent for some period of time. I mean, Jan can tell us whether it's accelerated or not, but I think it's been some period of time since smaller ship owners have had easy access to the big European and Asian lenders, and so there has been a real favoritism, for lack of a better term, for large, better capitalized, maybe more professional in some sense borrowers, and maybe to some degree that's been some factor in consolidation. But the marketplace is relatively efficient, so it's not like folks aren't able to borrow. In comes the world of alternative lenders to fill the role for those that can't borrow from the Nordeas or the Credit Agricoles of the world, and it just means higher borrowing costs, not just high. I mean, that is a penalty, because in a commoditized business that's pure cash flow that you don't have relative to a stronger borrower. But there is a market for sure, even for the smaller borrowers.
Great. And I invite you all to kind of chime in as you want, because we are short on time. I think just moving on to Yannick on this point, though, having lived now, I guess, in England for a while, Greece for the last few years at least, and now back in New York, that I think we've seen more new European players, kind of the smaller banks, smaller lenders come into the market. I'm just wondering kind of what your experience was, what you were seeing from that perspective.
So yeah, I mean, it was very, very interesting because when I arrived in Greece, so we were hearing a lot about the alternative capital. So and obviously more expensive than the traditional shipping banks. But what I also realized very quickly, so with the Greek economy getting better and the Greek banks, being able to get rid of their bad loans, they have quickly picked up, on the ship lending business, which was, by the way, a very good business, very good margin for them, way better than, for example, traditional sector, tourism, food industry, etc. And so what I've realized, and which was very good for us as a bank as well, very complementary. So we were focusing maybe on the bigger clients, but also the small one. But again, modern ships, whereby the Greek banks has been able very, very quickly to pick up, the business of financing all the vessels for the Greek shipping community at very decent margin and cheaper than alternative capital. And just to show you some data, I mean, back in 2018 from Petrofin, the Greek shipping banks, so the Alpha, Eurobank, NBG, Piraeus Bank, had a shipping portfolio below 2 billion. And I believe, at least from last summer, Eurobank is now at 4 billion, and Alpha Bank, NBG, and Piraeus Bank, above 3 billion mark. So we're talking about in 4 years almost, portfolio increase, globally speaking, 4 to 5 billion. But including amortization, it means that possibly the Greek banks have deployed, 7 to 8 billion, in the Greek market only. And I think also that money was very, very helpful, by the way, to the Greek shipping community to finance their purchasing activity at the right moment, basically before the cycle went up, especially on the rival market. So that was very enlightening, very interesting, and again, very complementary to our activity, Crédit Agricole, whereby we are focusing on the younger ships, and the Greek banks have been able to quickly finance possibly the older asset that the Greek ship owner wanted to purchase at very low price.
Right. So more tools in the toolbox to kind of plug the gaps and provide alternative sources. Speaking about like alternative players, as I call them, there are other alternative sorts of players in the market. And again, this is more of a cradle to grave kind of thing. And I'm just wondering, maybe Martin and Kevin, not that your end of the table is the doomsday side of the table, but there have been other players that come in and they kind of pick up secondary cheap debt, take it off maybe some of the Nordeas or the Cassib's books to help them out, and they have their own agenda. Have you been seeing a lot of that in the market? What was your experience at Nordea, Martin, and Kevin at AMA?
Sure. I mean, I think we were very happy to see some of those secondary market players come in because it created a market where we could offload exposure that we had designated we didn't want to hold anymore. So it's always good to see that there is a liquid market. Where it became some issues sometimes, where when we had larger syndicates that we tried to manage, and then suddenly some of the banks sold out, and then we had players in there that had a completely different entry price than the rest of us, and then that drove different agendas and often set. I say, it gave you some hurdles to get to the finish line, and sometimes we had completely different goals. So that was an issue. But in general, I think we are very appreciative of what the private equity did in this industry and all these other players. And just you talked a little about the bank market. I just want to add a note because I still talk to people quite a bit in the banks, and I find that right now I sense this positiveness and the load of money coming in. I hear about syndicate deals being done for the haves. There's always haves and have-nots, but the haves, and that's a word I haven't heard for many years now, syndicated deals, which to me is a sign of good times. And why is that? Well, I think the profits that the shipping companies have generated have resulted in better earnings, which have resulted in better ratings. On the same time, we also see that the alternative capital players are coming in. As I mentioned, the Chinese leasing companies are coming in, and they're giving greater terms than we also have seen in a long time. And why is that? Well, their portfolios have been prepaid, and they're looking for opportunities, and combined with the better profit or ratings. Just it seems there's plenty of money around to be had. I think Mark, and maybe that drives some of this consolidation, etc. But very very interesting times, I think.
Well, I'll just say something for a second, then Kevin, you should chime in. I mean, keep in mind how small the order book is in most sectors. And where it's large in the container space where, many of the buyers are, the liners themselves that don't need much financing. They've just dipped into their pocket. So, it feels like maybe the one reason why there's syndicated loans is, there's not that much supply. We haven't seen that in a while.
Right.
And institutions have the demand. So it is a better dynamic for sure.
I think it's right. Yeah.
Yeah, I mean, I think from our standpoint, we certainly see that kind of both ends of what I'd call the ESG spectrum. We've been looking at offshore wind quite a lot, which is a fascinating space, but has its own growing problems, as Robert Bugbee had alluded to in his speech during lunch. On the other side is the old school oil and gas offshore. And I can't name names, but there are companies out there that I used to do banking with that had 60, 70 banks that they dealt with. They did bilats, they did, club deals, they did some syndicated deals. And I would venture to guess that 85% of those institutions will no longer lend to that space. The credit officer will not go to credit committee with that deal because they're afraid of what could happen to them. So that's where I think the alternative lenders and the shadow banking, if you will, system has grown up around that, is really starting to lend. And to Mark's point, that gets into higher cost of capital. You don't see any new building orders in the offshore space, certainly not in the OSV space, but drill ships, jackups, and those are in high demand today. We're going to need those for a while. We're trying to get away from them, but we're going to need them for the foreseeable future. And the fact that you have much higher cost of capital around there just has knock-on effects all the way down the line.
Right. Well, you talked about higher cost of capital there a little bit, and obviously I think we're, at least in my career, probably some of the highest interest rates we've had since I've been practicing. How is that going to affect all of this good stuff that's going on, if at all? And maybe Yannick and Mark, maybe you can give your views.
The trend which we are seeing, especially for the good performing market subsector, dry bulk and tankers. So a lot of facility has basically been transformed into RCF as opposed to the usual term loan. And what does it mean? It's indeed, they keep the liquidity available, but repay the debt and only pay the margin instead of the SOFR. So that's one trend. The other trend, to think about, we mentioned alternative capital as being expensive, but a lot of fund from alternative capital has been raised, before actually the LIBOR SOFR rose, and so they're able still to lend at the same type of rate, which is basically high single-digit number, 8 to 9%. And so when you think about it, if you compare then, the traditional ship finance and the alternative capital, the gap or the spread between the cost of capital from traditional shipping banks and alternative capital is actually narrowing as well. So I'm curious to see what's going to be the effect in the future, but certainly I possibly will see maybe a little bit more alternative capital being deployed again, as opposed to traditional shipping banks.
Right.
The high cost of financing ships on the debt side is a godsend to the industry. It may be difficult for any one borrower, but that is a factor along with what I'd call technological uncertainty that's keeping the order book down amidst really high freight rates. It's been a long time since I've seen such healthy freight markets and really low order books, and so there's got to be something there. And I think part of what's there are the two factors that I just cited. But that gives us optimism that the cycle might have more duration than it typically does.
Does where we are in the cycle make this market now more attractive to some of the funds that would seem to come in between the 2010, 2013 range, that some of them are retrenched a bit? At least that's been my impression. is there more interest now because there's the chance of higher returns and a healthier market?
I don't think so. People getting burned. I mean, Kevin talked about people being burned on the banking side, and a lot of private equity firms and hedge funds were similarly burned. That's not universal. A bunch have been very savvy and have been able to make hay during the cycles, but it's been challenging. I just say in general, shipping is still looked at as a bit of a unusual place, maybe an insider's game, and so I don't think that we've seen, notwithstanding strong freight rates, strong share prices, there's not been an avalanche of demand either from institutional shareholders or from private equity firms.
I kind of agree. It is an interesting place and probably an inside player's game, personally. But, one of the other expenses, I think, and I'd be remiss without at least bringing it up for a minute, is we're a few years now into Poseidon Principles, and this is probably for Martin and Yannick a little bit. One, is that adding an increased cost, again, to doing business in the market? Do compliance departments have to be bigger? And then part of that package, and I'll wrap it all into a compound question, which lawyers aren't supposed to do, but we're short on time. Are we seeing greenwashing a lot these days? And so maybe Yannick and Martin, if you can touch on that with your banking experience.
Yeah, I mean, clearly, so we, obviously, as an institution, we've signed the Poseidon Principle, so, we stick to it. We take the data from our clients, and then we report, together with the other banks, what is actually the carbon footprint of our portfolio. And this has been ongoing now for the last 2 years. And again, I mentioned about the lack of new building and modern asset to be financed. So it did actually impact our portfolio, the carbon footprint, for many reasons. But, clearly we are paying attention to, because, this is also a regulation. We have signed the Poseidon Principle. So yes, the short answer is yes, we pay more attention. We ask more questions to the ship owner, the AER, the CII of the fleet. We know it's not perfect. We know there's a big component of CII is basically, the voyage, the charter, the speed. But, certainly, our clients can do also their part to improve or maintain the CII, which is basically investing in the ship. And so, and certainly back to greenwashing, I don't think there is greenwashing. We, again, we're not talking about green finance, but we are more talking about sustainable finance and, very strict objective when it comes to sustainability linked loan. There is, objective beyond what has been set by the IMO as objective, as carbon emission, but also in terms of capex and improving the vessel. So yes, short answer is yes, we're paying attention, and I think it's exciting for us and makes our business, I guess, more interesting as well.
It's a very interesting time, and I agree with Yannick. Of course, Yannick has right, but banks, particularly some banks that I know well, are very focused on the commitment to net zero. There's trajectories and its statement in public documents that says, if a customer or a transaction doesn't contribute to our goal of becoming a net zero bank, then we will no longer do business with that client. So there's definitely a very big drive at the top, but what I worry about is that drive will have unintended consequences, because it's difficult to get to net zero for a shipping company today with today's technology. I think it's sort of a given, as we talked about earlier, it drives maybe one solution for the banks is to do less business, which would be good for the new building market probably, because it would drive rates up. But I think we have to keep an eye on what is happening here. I mean, the interaction or the cross path between capitalism and environment is extremely difficult to navigate. And even when you saw BP come out last week, and saying something about, well, we have to make sure that our ESG principle doesn't get in the way of profitability, it kind of smells like, and I think, companies have to be very aware of their profitability, and if they can't be profitable as their competitor, then they're in trouble. So, for my view is that there has to be a higher power that has to sort of give some guidance and make sure that we all have a level playing field, and not cheat. Like my greenwashing story, but we can talk.
Oh, yeah, we're going to not have time for that greenwashing story. You can ask Martin about his greenwashing, his personal greenwashing story later. But all right, so on that note, I'll do one maybe rapid fire question for you all, which is there something that's got you really excited these days, or something that keeps you up at night out of concern for the markets? And whoever wants to go, feel free to hop in first before I call on you. All right.
I'll start. The dry bulk market. The recent correction, makes, I think, very, very interesting sector for our clients. And if you believe, China will bounce back, and then together also with the emergence of India, hopefully we will have a strong dry bulk market.
So that's excitement or concern? Or both?
Excitement.
Okay.
Well, I would sort of circle back on excitement. I mean, it's exciting when companies are making money, they're healthier, they're more dynamic, they're playing offense. We've all played defense. It ain't fun. Kevin and I have been involved in a bunch of restructurings. It's a bummer. It's work you do, but it's really hard, and it's a zero-sum game, it tends to be. Playing offense or helping your clients play offense is just a lot more fun. So I've been more excited about this part of the cycle than I have been in a while.
I would say offshore wind in the U.S., and from the perspective of putting the cart before the horse, I don't think the industry gave a full thought to the vessels that they needed and how to get those vessels before they started all their projects. And that's why you see, companies going back to the States and asking them to rebid the PPAs.
Right, to Robert Bugby's point at lunch. Martin, last but surely not least.
He plays golf 200 days. That's really why his green Harbour, it has green in it.
It's a challenge in itself.
Sorry, Martin.
I walk with an electric cart sometimes. But so I'm very excited about the balance sheets and the profitability of the shipping companies, and I am very excited about this transition to green, and I think it's gonna provide opportunities. We just got to make sure that it's a level playing field, and that the higher powers to be actually give us the right levers and the right incentives for doing the good thing. But it's good for the environment, and in my older days, I'm all for the environment.
Very spiritual, Martin. What the hell's happened to you on retirement?
I don't know how to work for
Well, I hate to be the bearer of bad news, but apparently there will be no coffee break because we are a little bit too far over on scheduling. But that means we probably have time for about a couple of questions from the audience.
Hi, this is probably a question you guys don't want to answer, but I keep thinking about it.
Great way to start, Laura.
We keep talking about net zero.
We'll give it to Martin then.
Net zero, we keep using this net zero, and nobody's really able to attain it. Why don't we say near zero and sort of move those goalposts a little bit today and go net zero maybe 5 years out or something? Just what are your thoughts on that?
I think it makes a lot of sense. I think when you ask if there's greenwashing, unfortunately, sometimes we've gone too far the other way. And there was an example out of Scandinavia, I can't remember which company, had built LNG capable, and they actually put the vessels back in the yard and made it dual fuel because they couldn't get there on the LNG side. So if you're putting investment in for things that can't be done yet and have to go back and redo it, it's just a waste of resources in my mind.
Last question. In the meantime, we'll rush off. Thank you all. Great panel. Really enjoyed the time.
Thank you, Brian.
I'm not sure how you're going to answer this question as well, but there's a big press in a lot of the state legislatures here in the U.S. to counter the movement towards ESG. And I was just curious if any of you have come across that and if you have any comments about that. Against it in certain state legislatures.
Kind of on the level of asset management where they push against the BlackRocks of the world.
It would be for anything, and especially for anyone that manages funds for states or projects that are funded by states.
Interesting. I haven't seen it, but that doesn't mean it's not out there.
Well, I know it's out there because my wife works at JP Morgan,
Yeah.
but that's why I'm asking if you guys have come across it yet in your sectors.
We have not.
Okay.
I guess I'll wrap it up with, a story that my old boss, Harry Thuchari, loves to tell, which was a few years ago, we were at a very similar conference, and it's all in how you define things, I think. So he was told how one of our clients had just delivered a VLCC cargo carbon neutral because they had bought offsets. So if you think you can deliver a VLCC cargo carbon neutral and put it in your, in your quarterlies that way, then good at you if you can get away with it. Or not. Thank you all.
Thanks.